Hello, future Austin homeowners. I'm Ryan Gomillion, your trusted real estate guide here in the capital of Texas. If you've been sitting on the sidelines waiting for the perfect moment to buy a home in Austin, you're not alone. Many potential buyers are hesitant due to rising mortgage rates and fluctuating market conditions. But is now the right time to make your move? In this video, we'll dive into the current Austin real estate market and explore if you should be waiting right now or jumping into the market. We'll cover mortgage rates, creative financing strategies, and one thing that most people don't talk about, the true cost of waiting. Let's get started. Over the past few years, Austin's real estate market has been a roller coaster ride. From rapid price increases to a slight cooling off, it's been a dynamic landscape. As of early 2025, the median home sale price in Austin is approximately $400,000, reflecting an almost 5% decrease from the same time last year. Homes are taking about 65 days to go under contract, indicating a more balanced market compared to the frenzy of previous years. Home prices have cooled and homes are taking longer to sell, but the number of home sales is on the rise. But what does this mean for you as a homebuyer? Is this an opportunity or a sign to keep waiting? Let's break it down. Now let's talk about the elephant in the room, mortgage rates. As of February 2025, the national average for 30-year fixed rates is in the lowish 7%. This is the national average, and it's not uncommon to find rates in the 6s in the Austin area, depending on how you qualify. While this is higher than the historic lows we've seen in recent years, it's important to consider the broader context. Here's a chart showing the trend of mortgage rates over the past decade. Historically, mortgage rates have fluctuated, and even in the high 6%, they're still relatively low compared to past decades. For instance, in the early 2000s, rates were often above 7 to 8%. And let's not even talk about when they were over 18% in the 1980s. So, while the current rates might feel high, they're not unprecedented. And here's something crucial. If rates do drop in the future, you can always refinance. But if home prices rise, you can't go back and buy at today's prices. Are you feeling the pinch of higher mortgage rates? Here are some strategies to make homeownership more affordable. Number one is buy down the rate. Negotiate with the seller to pay for points that lower your interest rate, either temporarily or permanently. This can reduce your monthly payment and overall interest paid over the life of the loan. This is also a common incentive offered by new home builders. Number two is adjustable rate mortgages or ARMs. Consider an ARM which offers a lower initial rate for a set period before adjusting. This can be beneficial if you plan to sell or refinance before the rate adjusts. Just make sure to be fully aware of when the ARM period expires and make your plans accordingly, because ARMs can and usually do adjust much higher than the average mortgage rate when the set period expires. Number three is government programs. Explore programs like FHA or VA loans, which may offer lower rates and down payment requirements. FHA loans can be especially competitive for first-time homebuyers, and VA loans are one of the best loan options available should you meet the military service requirements. Buyers and homes do have to meet some additional qualifications for these loan types, so discuss your options with your lender. Number four is consider a larger down payment. Increasing your down payment can reduce the loan amount and potentially secure a better interest rate. This does not always result in the best monthly payment option for you though. Consider a balance of a higher down payment and buying down your rate to meet your monthly payment goals. Number five is shop around. Different lenders offer varying rates and terms. Sometimes you can even find special programs or grants specific for your circumstances or for the area that you're buying in. It's crucial to compare offers to find the best fit for your financial situation. Don't let the sticker shock of mortgage rates get in the way of finding a creative solution for your home purchase. Now let's talk about a hidden cost that not enough people consider: the cost of waiting and renting instead of buying. Many people think they're saving money by holding off on a home purchase, but in reality, they're paying someone else's mortgage while missing out on the benefits of home ownership. Let's break this down with some numbers. Here's a rent versus buy comparison based on Austin's current market data. The average rent for a 3-bedroom home in Austin is around $2,500 a month, and the estimated monthly mortgage payment for a $500,000 home with a 10% down payment at 6.9% interest comes in at about $3,360 a month, excluding taxes, insurance, and PMI. Yes, the mortgage payment is higher, but here's the key difference. Rent is 100% of your payment goes to your landlord. Mortgage, part of your payment, builds equity in your home. Over 3 years, you'd spend approximately $90,000 in rent with zero return. But if you owned a home, even with slow appreciation, you'd likely gain equity and tax benefits that could add up to tens of thousands of dollars. And here's the kicker, rents keep rising. Landlords adjust their rents based on market conditions, and with Austin's demand, you could be paying even more in a few years. Meanwhile, when you own a home, your mortgage payment stays locked in aside from property taxes and insurance changes. So if you're renting while waiting for rates to drop, ask yourself, are you actually saving or are you just delaying wealth building? While waiting for rates to drop might seem appealing, it's essential to consider the potential benefits of buying right now. Equity building. Every mortgage payment you make builds equity in your home, unlike renting, where payments contribute to your landlord's equity. As you pay down your interest, the percentage of your payment that builds equity increases over time. And if you make extra payments towards your loan, you accelerate this process. Tax advantages. Homeowners can deduct mortgage interest and property taxes, potentially lowering your taxable income. While these savings may be small compared to the rest of the benefits, it adds up over time. Market appreciation. Apart from the outlier years during the pandemic, Austin's housing market has historically appreciated, maintaining its appeal for both homebuyers and investors. While you pay your home off, the market can appreciate, which works hand in hand to put more money in your pocket when it comes time to sell your home. Then there are the psychological benefits of buying a home. The pride, stability, and sense of accomplishment that comes with homeownership can positively impact you and your family. Austin's real estate market is always evolving, and while mortgage rates are higher than they were, waiting may cost you more in the long run. The cost of renting is stacking up, home prices aren't crashing, and the best time to buy is when you're ready, not when the market is perfect. Remember the cliche saying, time in the market is much better than timing the market. And also remember that everyone's situation is different, and you should only consider a home purchase when everything aligns for you. Homeownership is not a race. If you have any questions about the Austin real estate market or need help navigating your next steps, I'd love to help. Feel free to reach out to me using the information in the pinned comment below. And don't forget to like and subscribe for more insights into the Austin real estate market just like this. Thanks so much for watching, and I'll see y'all in the next video.